Imagine buying like a $3 coffee with Bitcoin, but by the time the barista actually hands you the cup, the network gas fees have cost you $15.
Right. And the merchant is just standing there waiting an hour for the payment to clear on the blockchain.
Exactly. It's a total paradox.
Hmm.
So today, welcome to our deep dive into a document on NadiFin, which is this cutting-edge crypto payment gateway. Our mission here is to uncover how this platform actually bridges the gap between, complex cryptocurrency networks and your everyday digital checkout.
Yeah, because it's a massive gap for most people.
It really is. I mean, think of NadiFin less like a simple payment processor and more like a digital universal translator
Huh.
or like a currency airlock. It takes the volatile, unpredictable crypto from the customer, locks in the exchange rate instantly, and then just spits out safe, stable fiat to the merchant on the other side.
And what's fascinating here is how it specifically targets the traditional choke points of getting paid. Like we're talking about bypassing legacy credit card interchange networks entirely.
Wow, entirely.
Entirely. And that mechanism alone significantly lowers transaction fees. Plus, it allows for instant payment processing, which really keeps the financial benefits front and center for businesses.
Okay, let's unpack this instant processing claim.
Right.
Because anyone listening who follows the space knows the physical speed limit of these networks.
Oh, absolutely. The native latency is a real hurdle.
Right, like the Bitcoin network takes around 10 minutes to validate a single block, and sometimes way longer depending on congestion. So how is NadiFin bypassing that native latency at a normal checkout counter?
Well, they aren't actually speeding up the blockchain itself. They are absorbing the latency on their end. So the platform essentially acts as a liquidity bridge.
Wait, so they pay it out from their own pockets?
Yeah, pretty much. When a customer initiates a payment in, say, Ethereum or Litecoin, NadiFin verifies the broadcasted transaction and instantly credits the merchant's account from its own reserves.
Oh, wow. So the merchant gets immediate settlement. That improves their cash flow without waiting for those underlying network confirmations.
Exactly. So the merchant isn't actually holding the crypto bag while the price fluctuates.
Which is the big fear for small businesses.
Completely. It's exactly the opposite of what people think. The integration converts the digital asset to fiat at the exact point of sale. NadiFin just plugs directly into existing business software, like an API sitting quietly on top of a Shopify store.
Or like a physical point of sale system.
Right, and the business owner just sees a standard user-friendly dashboard with real-time tracking. They're entirely shielded from the underlying crypto volatility, so they attract a broader tech-savvy customer base without, taking on any of the asset risk.
Okay, so the fees are lower because we've removed the traditional bank middlemen and the merchant avoids volatility. But those legacy middlemen usually act as the fraud police.
Yeah, they do.
So without them, how is NadiFin preventing like a compromised wallet from just draining a merchant's account?
Well, security isn't just a surface-level add-on here, it's structural. They don't just use standard passwords and basic two-factor authentication.
Which honestly isn't enough anymore anyway.
Right. The documentation outlines that they use multi-signature encryption on the back end. This means that even if NadiFin's own servers are somehow breached, the attackers cannot move the funds without a secondary, localized cryptographic key from the user.
Oh, so it literally creates a physical barrier to digital theft.
Exactly. It's built right in.
But we also need to talk about onboarding, because any platform dealing with fiat conversion has to comply with Know Your Customer, or KYC, regulations. And we know crypto onboarding is notoriously heavy on identity verification.
Oh yeah, it could be a huge headache.
So how do they handle strict KYC protocols without making the setup process a total nightmare for a busy business owner?
So they've streamlined the data handoff. Instead of a manual review process that takes days, the setup uses automated identity verification pipelines before you can even link your bank accounts.
Here's where it gets really interesting, because that sounds exactly like setting up any standard fiat banking app today.
It is. It cross-references global databases in real time, fulfilling international anti-money laundering laws without all that usual bureaucratic delay.
Which highlights how much the crypto landscape is actively normalizing.
Definitely. And once that identity is locked in, the merchant can instantly start accepting major coins with complete regulatory compliance.
So what does this all mean for you listening right now?
Well, if we connect that to the bigger picture, whether you are running a small business trying to protect your margins or you're just managing your own personal digital wallets, infrastructure tools like NadiFin are becoming totally indispensable.
Yeah, they really provide the actual plumbing required to stay equipped in this evolving digital economy.
Exactly.
It really comes back to that idea of the currency airlock. If gateways successfully stabilize the transaction, making paying with Bitcoin or Ethereum as seamless, secure, and cheap as swiping a traditional credit card.
Which is exactly what we're seeing.
Right. Then how long will it be before traditional fiat currency becomes the clunky, outdated alternative?